sit back and relax. You're listening to the Wealth Tech Today podcast. I'm your host, Craig Iskowitz, founder of Ezra Group Consulting. And this podcast features interviews, news, and analysis on the trends and best practices all around wealth management technology. My guest for this episode was Phil Haslett, co-founder and chief strategy officer of EquityZen. We spoke about the private market opportunity, EquityZen's platform and their technology, their acquisition by Morgan Stanley and how that went down, and market dynamics and competition in their space. And speaking of market dynamics, building wealth tech software is difficult, but for most firms, the real challenge isn't product development. It's figuring out how to actually sell into the wealth management industry. Ezra Group helps wealth tech firms accelerate that process. For more than 2 decades, we've advised RIAs, broker-dealers, custodians, and enterprise wealth firms about the technology vendors that they are trying to work with. We understand how these firms evaluate technology, how buying decisions get made, and why many vendor sales strategies fall short. So we work with wealth tech providers on go-to-market strategy, competitive analysis, pricing strategy, product market alignment, and distribution planning. So if you're trying to grow revenue, improve your marketing position, or break into a larger enterprise relationship, you need to run, not walk to our website, ezragroup.com, and click the large purple Contact Us button at the top of the homepage. We know how to help. All right, now standard housekeeping chores. Please subscribe to the show wherever you listen to podcasts. Check out our sponsor, the Invest in Others Charitable Foundation at investinothers.org. And if you're a software vendor in the wealth management space, please make sure to register your product at our Wealth Tech Integration Score Vendor portal at ezragroup.com/register, so that your product's wealth tech score will always be up to date. And now, let's kick this thing off. All right. I'm excited to introduce our next guest. It is Phil Haslett, co-founder and chief strategy officer of EquityZen. Phil, it's great to see you.
Thanks for having me, Craig. Excited.
I'm glad you could be here. We were just talking. We are so close. You're calling in from New York City. I'm in New Jersey. We could do this in person next time.
Yeah, I think as the crow flies, it was probably only a couple miles.
I think there's a lack of podcasting in person. They should bring that back and start doing more of those. All right, so let's get this show on the road here. Can you, for anyone who hasn't come across EquityZen before, could you please give us a 30-second elevator pitch?
Absolutely. So EquityZen is a platform to buy and sell pre-IPO shares of privately held technology companies. So the best example might be, 10 years ago, if you wanted to invest in shares of Coinbase while it was private or DocuSign, we worked with investors that wanted to do that and connected them with employees or ex-employees of those companies that had shares that were looking for liquidity, and brought them all together through a digitally native platform, which is EquityZen.
That's fantastic. I would have loved to have gotten into Coinbase.
Yeah, I usually pick a good one,
Yeah, you always pick the good ones. That's right. I need the reverse opportunity. So when I see that they're good, then let me go back in time and get in there. But there's so much opportunity in the market for private shares, but only, according to some research from Tiburon, only about 13% of advisor managed portfolios currently include alternatives. And it looks to me like that number is plateauing rather than climbing. So for a platform like EquityZen, obviously you would depend on advisor adoption to grow. Is that a headwind for you, or do you see it as a temporary setback before alts become more of a standard practice in advisor managed portfolios?
I think it's probably just a reminder that there is still awareness missing for the category. So, even within alts, you kind of talk about them broadly plateauing. I would say if you think within alts, you've got real estate, you've got infrastructure, you've got hedge funds, you've got private equity, you've got pre-IPO shares. If we even think about the dimension that EquityZen's in, which is kind of pre-IPO investment and liquidity, the awareness is still really low. It's just such an early nascent space, even though you've gotten companies that are getting bigger and bigger while they're private, and you've got 1,400 unicorns, and you've got companies worth over $1 trillion while they're private. The awareness that you can actually make investments in the space is still a work in progress. And so I think the 13% number is probably a reflection of that.
Yeah, there are companies that are going to $1 billion or $1 trillion and staying private. It seems kind of crazy, as you mentioned. Companies staying private longer. It seems like a macro trend, and everyone cites that as a tailwind for platforms like you. But does that trend have a ceiling? Like it can't go on forever, right? So, what happens to your addressable market if the IPO window reopens and companies start going public faster again?
So actually, for secondary markets, you tend to see an increase in trading and activity when the IPO window is open. And so our initial thesis, I think a lot of people's assumption is that while the IPO window is closed, then private markets are going to be more active because it's the only place you can do trades. But actually, what you see is that when you can validate that investing while a company's private through an EquityZen or through a capital raise or something like that, if you validate that you can actually have an exit path and monetize what you made your investment in, we actually see more activity. So it kind of actually catalyzes activity. So I think seeing the IPO window, hopefully open up here, in kind of middle of 2026, should be a good boost for the overall space, particularly with some bigger IPOs that are coming through.
You said categorize or catalyze.
Catalyze, I'd say it would catalyze.
So, what do you mean by catalyze this activity?
So if you just hypothetically think of somebody that put, a $20,000 check into an EquityZen offering, 3 years ago or 4 years ago in a private company, and that private company is finally going public now, that person is going to, hopefully realize a gain on that $20,000 investment and actually get liquidity. To me, I think that catalyzes the secondary market because it kind of shows that there's more investors that want to start investing in the space,
Okay.
either reinvesting or people come for the first time, right? Because they actually see like, oh, if I put $1 in, I get hopefully more than $1 out. But in absence of that, you actually have some people that say, it's kind of hard for me to write a check and invest in this big late stage private company if they tell me that they're never ever going to have an exit event. Then, how do I generate a return?
Indeed. Cool. All right. So there was a survey done by KKR of RIAs last year, and nearly half of respondents said they currently allocate 10% or more of AUM to private market investments, and 81% expect to maintain or exceed that level in 5 years. So financial advisors are increasingly fielding client questions about private market exposure, but most RIAs don't have the infrastructure to support it. So how do you see their role evolving, and what places EquityZen, how do you fit into their tech stacks?
So, each RA, whether they're a wirehouse or they're an independent, will have a slightly different kind of tech stack and therefore potential solution. I would say right now, leading up to our partnership with Morgan Stanley, the way we worked with independent RAs in particular was that those RAs could create accounts on the EquityZen side, and if needed, we could feed over information to whatever reporting they used. It's still a little ad hoc, but that's where we saw. I would say advisors and RAs being the most active. I think the argument you'd make is that maybe if you're at a really large wirehouse, you had some exposure to private markets a bit more so than if you went independent. So where we felt like we kind of created a bit of a solve for RAs were the independents that were now looking for that exposure they might have had when they left the wires. So that's kind of the role we've been playing in particular.
Cool. So I want to talk more about the EquityZen platform and technology now. So can you walk us through what happens under the hood when a transaction is processed on your platform? How does it go from matching a seller to closing the deal? Where does the technology do heavy lifting versus where do humans still need to get involved?
So I think most financial transactions really just kind of look like plumbing. And when you think about financial technology, it's how you can kind of automate some of that plumbing. EquityZen's really not that different in that regard. So if you want to make an investment on EquityZen, what we've digitized and kind of built the infrastructure for is that you can go through an investment flow that we try to mirror as much as buying shares of a publicly traded company through your Robinhood account or your E-Trade account. And so that means that on the EquityZen side, you can browse different companies that are available. You can read research that we put together. You can look at historical transaction data. And then if you want to make an investment, you can actually go through a process of signing subscription agreements online, going through our KYC and AML processes online, providing bank account information through API so that we can pull money later on. getting confirmation of your investment at close, and do that all in a completely self-serve manner. And if you think about what is the technology that actually drives that, it's really what we did is we looked at how somebody bought a private share in 2013 when we started, and looked at each step and said, which part can we actually digitize and automate, and which part can't we? And that's kind of the secret sauce of EquityZen. Is over time we just found the really boring, annoying pieces of doing a private equity transaction and tried to chip away and build technology to solve this piece or that piece. Now, of course, there's going to be some pieces in the margin that are a little unique, but I think we've done a pretty good job in pursuit of that. I'd say one thing that probably goes a little unnoticed, but is really powerful for us is, there isn't really any standardized infrastructure solution for private markets, right? There isn't an exchange really for any of these things. There isn't a clearinghouse.
Well, there's a lot of vendors out there trying to, who have built those. They're just, none of them have got enough market share to become the dominant provider.
Well, yeah, and also, but there's no standardized governing body, right? So you don't have QSIPs for private companies, and you don't have ISINs for private companies.
Right.
I always it's funny when you search through public filings. There's some publicly traded funds that hold shares of private companies, and to even map out the Fidelity Fund holds this company and the T. Rowe Price Fund holds the same company, they might be tagged and identified completely differently, right? So each independent platform, EquityZen included, has to think about how you might standardize all that information, right? But once you standardize and structure the information as it gets ingested, you can scale it up. And so I think we spent a lot of time doing that. And that's allowed us to do, to provide transaction opportunities and do transactions in, close to 500 companies, do over 50,000 private placement transactions with a pretty lean team. And you really only could do that with actually building the infrastructure.
Of course. Yeah, you have to have the infrastructure in order to get that running the way you've got it. Last year, special purpose vehicles represented over 50% of total private secondary volume, which is up from 40% the year before. And so this is reflecting how structuring complexity has increased alongside volume. And as we know, private market securities are notoriously murky. So how does your platform approach the valuation and price discovery beyond just identifying the methodology of how to identify a particular security? How do you do valuation and price discovery, and how confident are you that the prices on your platform reflect true market value versus just the last round price?
Yeah, it's a great question. So we have an internal team on the research side that's evaluating companies. So I think that's a starting point. I'd also say, just because of the amount, the sheer volume of buyers and sellers that are on the EquityZen platform, the more density you have in the market, I think the more you can really underwrite or defend the prices at which you're trading, right? It's because you've seen more of the market than others. I think that's the other supporting argument. And when you combine those two things and actually point to the fact that EquityZen is not just an open architecture platform, right, where people can just list any shares of any company at any price, it actually has to go through some curation and evaluation. I think that's kind of something that we really stood by. It was a decision we had proactively made, but we thought by saying no to a lot of things and having a bit more of a curated offering, we would be able to kind of defend what things ended up on the platform. And then, of course, kind of being a regulated entity, being a broker dealer, we're going to show the lowest offer we have available to our clients. So I think when you combine all those things together, it's something we can really stand behind.
I certainly hope so. Yeah. So so that leads. You made my next question moot. Where what does the data advantage give you having 50,000 private placements across nearly 500 companies? And it's price transparency that you have that other firms don't.
That's right. And I think it compounds positively, or it snowballs, whichever analogy you want to use, where a lot more data and historical transactions brings more comfort for people coming to use the market, which brings more and more transactions, which kind of makes you more and more powerful to do so. I don't think anybody's purely, really solved this. I think it's still a very, very fractured market generally. But I think we've got as good a shot as any of having kind of the most data available.
Cool. All right. Moving on to our next phase of the interview. Let's talk about the Morgan Stanley acquisition, which I think is really super interesting. So the deal closed just this year in January. And the first thing that Morgan Stanley seemed to have done when they acquired you was immediately cut transaction fees, reducing buy and sell side fees from 5 to 2.5% for most transactions. So your CEO recently said that the deal wasn't about selling, it's about scaling. But every founder says that. But so right, so now the deal's closed and you're inside Morgan Stanley. Besides the price cut, which is nice, what else has changed day to day for EquityZen team and clients?
Well, I would kind of reframe it to think about, what I think the question to ask is, how does EquityZen kind of operate as part of Morgan Stanley, and like what are the benefits and what are the challenges, right? To kind of give it like a balanced opinion. Um, and what I like to point to is that Morgan Stanley brings a lot of pieces of the puzzle together, and EquityZen might be kind of seen as a missing piece. So what do I mean by that? In private markets, Morgan Stanley has a solution for private companies in where Morgan Stanley can serve as an investment banking representative for a private company. It can help manage the company's cap table through a product called ShareWorks. It can help with capital raising, and it can help provide financial advice to people if and when they get liquidity along the way. If you wanted to connect those pieces, right, a $7 trillion wealth manager, a software solution for private companies, an investment banking solution for private companies, you might want a bit of an infrastructure component that helps actually marry transactions together. And I think that's squarely where EquityZen sits. So I think the opportunity and the thesis going into it that is starting to prove out is that EquityZen brings a really helpful solution to the table from within Morgan Stanley, and that for EquityZen's clients, we actually have more we can bring to them than we ever could before. Right? There are opportunities we might get through to working with other parts of Morgan Stanley, and there are also opportunities that we can bring to Morgan Stanley clients as maybe investors, right, through the wealth management channel, where we can bring more liquidity to a shareholder than we ever could have in the past. And so that's been really, really exciting. It obviously goes through some growing pains, right? We went from a company of 55 people to a company of 80,000. And with that comes an added layer of administration, which we understand, but I think the juice is worth the squeeze.
Let's hope so. So Morgan Stanley has been seemed to be on a tear of acquisitions, right? They acquired a company called Solium, which they felt was going to disrupt equity administration. Of course, they bought E-Trade for digital brokerage. They bought Eaton Vance for index creation. So in each case, you could say Morgan Stanley's positioning the acquisition to preserve their disruptive innovation while adding distribution scale. Do you see that happening with you? And how do you avoid sort of being sucked into the Morgan Stanley world? As you mentioned, 80,000 employees, 20 million clients. How do you avoid keep your EquityZen disruptive innovation inside this huge firm's bureaucracy?
Well, I think the first part is Morgan Stanley has a history of not only being acquisitive, but really finding the ways to bring the best out of what they bought. So Solium was a cap table admin for private companies based in Canada, kind of sleepy business that I think a lot of people had never even heard of, that James Gorman spent $900 million on. But really what it's enabled Solium to do is serve more and more private companies and help those private companies with additional services that they never could have in the past, vis-a-vis financial advice at scale, tender offers, raising capital for those companies. So I think if you bring that as an analogy for how do you kind of preserve what EquityZen has, I actually think it kind of helps turbocharge things that are on the roadmap for EquityZen or had been, right? I think our Atish and I we kind of had an ultimate goal to bring private markets to the public. That's kind of the tagline we've used. And if you look at how long we thought it would take to achieve that, if you have kind of the Morgan Stanley cannon behind you, you can get there a lot faster. So I think that's how to really answer your question, like how do you kind of preserve the entrepreneurship? I think there's been some great lessons learned positively and constructively in the acquisitions over the last 8 or 9 years by Morgan Stanley. We hope to learn from those. So far, so good. But there's obviously growing pains too along the way.
We're all learning all the time. What I heard somebody say something about that you want to like live like you'll die tomorrow, but learn like you'll live forever. Right.
I like that.
There you go. That's my philosophy for the day. My sharing of philosophical ideas. Right. So, but sticking back with the Morgan Stanley deal, the Morgan Stanley had a partnership with Carta which they expanded last year, focusing specifically on the IPO pipeline. So Morgan Stanley at Work became Carta's exclusive US public equity management and broader workplace benefits platform. So they're designed to help private company founders, executives, and employees prepare for liquidity events and IPOs, which makes a lot of sense when you're Morgan Stanley because you've got a huge wealth management business. So how does that relate to what EquityZen does? Do these pieces fit together, or is there overlap or conflict?
No, it fits together really well. I think Carta does a fantastic job of helping manage cap tables for private companies, and they have an enormous amount of market share. Um, those are the same private companies that EquityZen works with, but in a different capacity, which is addressing liquidity over time. And so I think there's actually a very complementary set of skills that are going on here. And I think the interplay between Carta and Morgan Stanley makes a ton of sense because Morgan Stanley can help take these private companies public, by way of kind of doing the IPO, but also managing, their stock plan and helping with financial advice in a post-IPO world. And so having that partnership with Carta gives them a great funnel of prospects to work with. So I think it's really, really synergistic.
Let's hope so. I hope you're right. Yeah, I want to give credit where credit is due. That I first heard this from Chip Rome at Tiburon, but EquityZen sits on a database of hundreds of thousands of pre-IPO shareholders who will most likely, or hopefully, experience significant liquidity events. That's an incredible prospect list for any wealth management firm. So how much of Morgan Stanley's motivation to acquire EquityZen was about mining that data to identify and convert those shareholders into wealth management clients before a competitor does?
Uh, Part of the story. I think the fact that EquityZen brings a unique audience of buyers and sellers, right? Mostly self-directed clients was probably, a component of the acquisition and of the industrial logic. But I kind of go back to this idea, Craig, of EquityZen serving as a bit of the kind of the missing jigsaw puzzle piece that kind of connected different parts of Morgan Stanley together as probably like the key differentiator. When you're a $7 trillion RIA, I suspect that acquiring client bases can only do so much, and so I'm sure it's a nice kind of cherry on top. But first and foremost, we want to make sure that the clients that we've been working with for a long time continue to get kind of the best service, the best opportunity they had, like they did when they were at EquityZen. So we just want to make sure that we're steadfast on that.
Well, yeah, Morgan Stanley is a huge company, but every little bit helps. You don't want to turn
For
anybody
sure.
down, right? So speaking of that, I got a couple more stats. So Morgan
Yeah.
Stanley's own data, their liquidity trends data, puts the prospect opportunity at 45% of private companies, according to their survey, say their ultimate goal is an IPO, up from just 13% in 23. And 4 out of 5 equity compensation decision makers feel pressure to facilitate a liquidity event. So every one of those shareholders is a future wealth management prospect.
Exactly right. I think you're seeing the thesis. I think Morgan Stanley's pretty early too, which is that private markets are interesting because they've grown in total addressable market or kind of market cap over the last decade or so. I think when we started EquityZen in 2013, there were 39 companies worth $1 billion or more, and now we're at 1,400 with an aggregate market cap of a couple $1 trillion. But I think the opportunity is that you used to provide financial advice to employees and shareholders when their company went public, and that happened pretty often and maybe earlier on in their life cycle. Now I think you're seeing that's employees are amassing quite a bit of net worth and wealth, whether it's paper net worth or paper wealth or actual wealth through a liquidity event like a tender offer or selling shares through EquityZen. While the company is still private, so you kind of want to be in front of those people because they have a lot of questions. I would say a lot of times when we do a transaction on EquityZen, the selling shareholder, they might only be selling a couple $100,000 worth of stock, which to them is a very life-changing event. It's probably the single biggest financial transaction. And before the union with Morgan Stanley, we didn't really offer anything other than we sent them the money to their checking account and we sent them a tax document, at the start of the next year to make sure they had it. But we weren't there during kind of that money in motion phase, right? It's probably a good parlance I've learned through the advisor space. There's some money in motion and there's some money in motion. We weren't doing anything. So now we feel like we're in a better spot to help them.
All right, I'm running out of time with this. This is going by fast. Let me hit a couple of the tough questions. So a lot of investors have bought pre-IPO shares back in 2021, kind of got burned when the valuations reset. So how do you address this problem in the pre-IPO space, and what is EquityZen's track record when you look at realized returns across the portfolio?
So we don't explicitly share kind of realized returns across the portfolio, but I think you're asking the right question. Is there, how people fared if they invest in 2021? And the answer is that cohort at EquityZen, like other venture capital investments from that vintage, hasn't performed well. Things were overpriced, and some people have taken a hit. And then I'd say that also there were a couple years after 2021 where there wasn't much activity in the secondary market, and there wasn't much activity in the primary market for venture-backed companies. And so I think if you kind of look at that as an investor, were there opportunities outside of EquityZen you should have done? I'm not sure. I think it was generally an overheating of the market generally. We've seen a lot of those valuations come back to those levels, fortunately. It's just taken a lot longer. I think, quite frankly, it's good to have the market kind of have a little bit of a reset every half decade or so, public and private. So, the nice thing I will say, though, is that I think something like 80% of the volume that happens on EquityZen is from people that invest for the second time or more, and I think that speaks to the fact that people want to make multiple investments, even if some of them were in 2021 or in eras that hadn't performed as well.
I've only got time for one more question. So a lot of advisors who are listening to this podcast are very familiar with platforms like iCapital and Case, but EquityZen is fundamentally different than those. Can you explain the difference between them, where iCapital and Case are about packaging and distributing traditional alternative funds, whereas EquityZen is more of a secondary marketplace? Can you explain the difference?
Yeah, it's a great question. iCapital and Case are both great platforms in service of RIAs and their clients, particularly for, as you mentioned, diversified alternative investment products. So think of Case bringing you an opportunity to invest in an actual venture capital fund or a feeder into a venture capital fund that's going to be actively managed and have investments in 10, 20, or even 100 different companies. Likely comes with a fee structure that charges a management fee and a carry over time for your clients. EquityZen would kind of be the a la carte menu, if you will, instead of the fixed one. So it is for clients that want to invest in single companies. Perhaps it's a product they use, perhaps it's a product they heard about, and EquityZen gives them the opportunity to do that on a name by name basis. They can kind of customize their own portfolio. So that would, I think, be the biggest distinction. There's certainly space for both. And we've stayed very kind of vertically focused on the pre-IPO single asset game, and I think because of that we're kind of experts in the field.
So I think that's all I got time for. We're at the end. Where can people find out more information about EquityZen, Phil?
They can go to EquityZen.com, EquityZen.com. And to learn more, they can register. I'd say creating an account takes less than a minute. And then there's also a lot of great content on the blog, EquityZen.com/blog, which will give them more details as well.
Perfect. Phil, thanks so much for being here. I really appreciate your time, man. We've learned a lot.
Thanks, Craig.
Hey, it's Craig again. Here are my top 3 takeaways from this episode. Number 1, EquityZen fills a critical gap in Morgan Stanley's private market ecosystem. Rather than just being an acquired client base, EquityZen serves as the transactional infrastructure layer connecting Morgan Stanley's existing private market pieces, ShareWorks, investment banking, and wealth management. The acquisition gives EquityZen distribution firepower to accelerate its mission of bringing private markets to the public. Number 2, an open IPO window is a tailwind, not a threat. According to Phil, more IPOs catalyze secondary market activity rather than cannibalize it. When investors see actual liquidity and returns from pre-IPO investments, it validates the asset class and brings in more buyers and sellers. EquityZen's business benefits from both closed and open IPO windows, making it more resilient than it might appear. And finally, EquityZen's data moat could be its biggest competitive advantage. With over 50,000 private placement transactions across nearly 500 companies, EquityZen has price transparency and market depth that few competitors can actually replicate. The data advantage compounds over time. More data attracts more participants, which generates more transactions, which deepens the data further. And it also represents an enormous prospect pipeline of pre-IPO shareholders heading towards liquidity events. And that's it. You've reached the end of another episode of the Wealth Tech Today podcast. Thanks for listening. But before you go, head to our website, EzraGroup.com, scroll to the bottom of the homepage, and sign up for our newsletter. Once a month, you receive an email chock full of wealth management goodness, news, information, and updates. You will not be disappointed. Thanks again for listening, and talk to you all again next time.